Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for Tuesday, October 13th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is like having risk radar for the U.S. stock market. Today, the S&P 500 was down 63 basis points, and we closed at 3511.93. The first chart that we're going to look at is a one-day, one-minute candlestick chart of the S&P 500. So each candlestick does represent 1 minute of trading. As we can see here, once we opened, the market sold off pretty much all day, and we hit our lows of the day right around 2:30 this afternoon, just under 3501 at 3500.96. So that was the lows of the day. We had a little bit of a bounce from about 2:30 until just after 3:30, and then the market sold off into the close, and again we closed at 3511.93, down a little over 0.6%, down 63 basis points for the day. The next chart that we're going to look at is a 2-month daily candlestick chart of the S&P 500, and I want to focus just on these last 2 months so we can really see where we've been over the last couple of months. And what we can see here is the all-time closing high on the S&P 500 was back on September 2nd at 3580.84. Well, yesterday's close of 3534.22 was the second highest close ever in the S&P 500. I think a lot of people don't realize that. This top blue line, I drew that right around that 3534 level, so you could clearly see that the only candle that has ever closed higher in the entire history of the S&P 500 is this one right here, okay? So yesterday on the 12th was the second highest close in the S&P 500. The third highest close ever was back on 9/1, and today, even though we sold off a little over 0.6%, our close of 3511.93 made it the fourth highest close ever in the S&P 500. So even though we were down a little over 0.6% today, guys, this was still the fourth highest close ever in the S&P 500. The fact that we came down and stopped just above this 3,500 level makes the 3,500 level kind of the short-term line in the sand. So we will want, if this market rally is going to continue to go higher from here, we want to continue to close above 3,500 on the S&P 500. Now, if we start to see closes beneath 3,500, we know that the market is starting to weaken. The next thing we would want to see is this trend line that's been intact really since September 24th, where we bottomed at 3210. We want to see the market stay above this trend line. So in the event that we start to close beneath 3,500, the next thing that I will be watching is this trend line, and to make sure that the market is continuing to close above this trend line. So there was a little bit of damage done to the market today, but nothing too bad at all, just down a little over 0.6%. Nothing too worrying yet. However, if we start to close beneath 3,500 on a daily basis and then beneath this trend line, that's when we know we're starting to see a reversal in the direction of the stock market. But until then, I don't think there's anything to be too concerned about just yet.